What's good, people? I'm Daniel Omach. Welcome to the freestyle. Today, I'm gonna be talking about investing. Many of us have thought about it. Maybe we're starting to think about it even more today. We're gonna cover it off today. This is Investing 101. Look, I'm gonna keep this pretty simple and hopefully fun. Many of us have seen a lot of videos on this topic of investing, and let's just say there are a lot of different approaches. So we're talking about investing, right? Look, when I got my first yacht, I was 9. When I got my first private jet, I was 12 and a half. Was it easy? Mostly yes. Do I expect others to be able to do it? Perhaps no. But anyway, back to my yachts, right? So investing, yeah, I mean, it really just comes down to if you invest in yourself, you will be wealthy beyond your wildest imagination. So yeah, that's pretty much how you do it. That's really it. Cool, and as we kick off, quick disclaimer, I am not a financial advisor. Great, all right, why you should invest now. For me, it comes down to 2 C's, the 2 C's rule, cumulative and compounding. Cumulative, a hard word to say, but an important one. Whether you're young, middle-aged, or old, the fact remains, investments can grow, right? So the earlier you start, the more time you have to participate in that potential growth. Think about a coin jar. Come home, few days, put a coin jar in there, you look at it, 1 week later, you're like, great, barely any coins. 2 years later though, cumulative, you see it. Second piece is compounding. Compounding means an asset's earnings get reinvested. So you net a return on your initial investment, but then as that investment grows, you can continue to net a return on a larger and larger investment, right? So that's compounding. The earlier you start investing, the larger that cumulative total and the more compounding there is that you get to take advantage of. All right, quickly I want to get into investing principles and approaches for different ages. Those of us who are younger can tolerate more risk, right? That's what they tell us a lot. It is true. But those of us who are younger may often have less income in total to invest. By the way, don't be too risky though. I'm looking at you and I know you had a wild weekend. Wear a mask, wear protection, be safe, all that stuff. On the flip side, those who are near retirement may have more money to invest, but less time to recover from any losses. So a lower risk tolerance, going to speed limit, 1 drink, that's it, that kind of vibe. Next up, investment goals and styles, right? So you need to decide on your investment goals and the type of investor that you want to be, right? I break it down into 3. Number 1, the long-term approach, right? Long-term investments, this falls like 3 years plus, pretty low touch, not very hands-on, but more predictable and perhaps more safe. Second piece, I'll call this balanced. It's sort of a balance between long-term and a short-term approach, where some of your investments are longer term, less involved, and some of them are shorter term, where you have to pay closer attention to. I put myself in bucket 2. Number 3 is shorter term investment. As short as a month or a few weeks out to maybe 1 to 2 years is your investment horizon. It requires more attention. It's likely to be more risky. So let's start with the first bucket, long-term investors. You're just getting started, pretty hands-off. The analogy I'd use here, if we stick with cars, it's kind of like you can take the Uber. You don't need to be the driver. You don't need to be behind the wheel, but you'd like to have a good driver that can just get you there. So if you fall into this bucket or you think you want to, I would look into mutual funds, index funds, and automated investment services or robo-advisors like Betterment and Wealthfront. So the way these robo-advisors work is they automatically invest for you based on your selected risk tolerance, right? So they invest primarily via these things called exchange traded funds or ETFs. I'm not gonna spend too much time defining things because it will take over the entire video. I put some definitions below in the description and you can always Google, you can always use Investopedia. They are your friend. Thank you. Great, so retirement accounts automatically fall into this bucket. 401ks, IRAs, Roth IRAs. You can do a separate video on just retirement investing alone, but basically it's not for 3-month option trades. It's for long-term investments of value. My IRA, for reference, is mostly mutual funds and just overall themes of market exposure. So tech, international, etc. So far, It mostly tracks market performance, but it also isn't too volatile, lower risk profile than a lot of my other investments. Services to use for this: Fidelity, TD Ameritrade, E-Trade, Charles Schwab, lots of different options for this style of long-term investing, but I use Fidelity and I like it a lot. And on the automated investing or robo-advising front, Betterment is really great if you just want an easy to use interface. You're just getting started, you don't know a ton about markets, but you want more of your money investing and compounding and accumulating, right? Betterment is a great service where you can pick this much equities, this much bonds, and again, I'm not going to go into defining those, but they will break down for you based on that, based on your time horizon and your risk profile or risk appetite, and they will invest for you automatically. A robot. Beep, boop. That was bad, my bad. Anyway, second bucket, balanced, right? You want to get in Ubers, sticking with the analogy, with really good drivers, but you also like driving a bit, you know a bit about cars, you're not an expert, but you know a bit. Sometimes you want to like whip that thing a little bit, you know what I'm saying? That's fine. The balance, you're still down to getting Ubers, that's me. I put myself in this bucket. So I use Fidelity, as I mentioned. I also have a Robinhood account, but I barely trade on there. Within my Fidelity account, I have my retirement accounts in there where I'm invested in lots of mutual funds and ETFs, but I also have a personal account, where I'm invested in riskier plays, such as single stocks, slightly more volatile ETFs around different themes like electric vehicles. Shout out. And of course, per my last video, I invest in options. The last and final bucket, this is purely short-term investments, higher risk profile, for the more hands-on investor. Using the analogy of cars, you love driving. You are a car aficionado. You want to get behind the wheel. You can see yourself really getting into markets. And you're also really trying to make some serious bread in the short term. And you're comfortable with the risk that you can lose a lot of that. That's really this third bucket. And for people in that third bucket, you're less interested in mutual funds and safer plays. It just doesn't appeal to you in the same way. So the services I would look at if you fall into this group: Robinhood. Sure, I know there was a lot of hoopla about them, but they're a legitimate service for this kind of thing. Webull, Public. I heard Public was really cool, has a social investing style where you can hear from other investors why they decided to invest in a certain stock. And here's the thing about these services, as far as I know, well, definitely with Robinhood and Webull, they don't even have mutual funds as an option. It's stocks, ETFs, options, flat out. So that's really what you're signing up for, to trade, to really get into it. And if you fall into this bucket, or you think you will, I say sign up. Sign up for Webull, sign up for Robinhood, put $20, $50, $100, more than that, into a stock that you research about and like. Start benefiting from the 2 C's, right? Cumulative and compounding, and get started. That's it. This is about investing. We're really getting started. So many of these topics that we covered today, they can be their own video. So just realize that this is only the tip of the iceberg and we're just getting started. But a lot of people ask me about this. My background did start my career in FinServ on Wall Street. With that said, again, that doesn't always translate to like some crazy returns. I'm not gonna sit here and tell you I made $1 million. Here's how you do it. That's not what I'm gonna do. So really, we're gonna learn together. It's been a lot of fun. Thanks for checking out the video. This is The Freestyle. I'm Daniel Omach, and I will talk to you very soon. Peace.